Well, what does the next couple of months, the remaining 10 months of this year at least, look like for deal activity, given the kind of sentiment in the secondary market? We have a special guest joining us here in the studios, Amit Thawani, who is MD and, of course, also head of investment banking at Nomura. Amit, great to have you here in the studios with us. Thank you so much for joining in.
Thank you, sir.
When we met in person last, it was December.
Yeah.
And, there was a lot of talk about hope and what the new year will bring. What the new year has brought about are challenges, whether it's currency depreciation, whether it's the equity market, whether it's tariffs. So what do you make of the overall sentiment and how that's spilled over into Deal Street?
Thanks, Surabhi, for having me on the show. When we met in December, we did discuss that markets are looking somewhat high and at least overheated in certain areas. To that extent, if you see, there has been a correction. Does it overly worry people like us? The answer is no. We still feel that the deal activity will play out. Currently, there's a lot of uncertainty with respect to US and the tariffs and how the entire thing pans out. But net, if you read the global commentary, if you read, the right quality of literature, you will realize that India is going to be a net beneficiary in a number of ways. From a Deal Street perspective, if you see, despite all the volatility, despite all the, talk around, serious volatility impacting markets, Indian retail not spanning out, etc., we've had large IPOs which have actually happened.
Yeah.
Whether it's Hexaware, whether it's Dr. Agarwal's, whether some of the others. And the pipeline in terms of IPO activity looks pretty strong. I know it's a brave statement to make.
You know why? If I could just come in over here, and you're saying that the deal pipeline activity still looks strong. I'll give you a number that one of your peers, who was in conversation with the bankers at Axis a couple of days back, they gave us a number which made us all sit up and take notice. They said that you can still expect supply of 50 to 55 billion coming to the market across IPOs, across all kinds of ECM deals. Now, is that still possible? Is there appetite? And what do your numbers or your rough calculations say?
So I don't want to get bogged down to a number, but I think last year there was IPO activity about $16 or $18 billion, whichever estimate you take, and blocks of about $20 billion, which was the highest activity on block side. We normally expect, which is already underway. Yesterday there was a large block that happened. I'd be sort of assuming a deal activity of anywhere between your audience should also realize deals can sometimes take a little longer. So it's not about deals getting called off or deals getting sort of out of question. It's more about sometimes timing that you have to play into. And overall, the quality of the supply of paper is quite good, which means that if in a particular month you're not able to price it, you'll price it the next month.
Absolutely.
That's how we see it.
Amit, morning. 35 to 40, that's the total equity supply you're talking about, right? So that's already a little lower than what we heard earlier. But those numbers...
These numbers pan out. You ask them in the second half of this year, this number could be higher.
And I think it's also a function of the market, right? They self-correct and they go up and they go down, and all that will happen.
And what happens is also, you see, as you have seen a sudden rush out of liquidity, you'll see a rush off in liquidity also. So these things happen nowadays. So you have to play it by the art.
But we've had a few years of extraordinary markets, right? You wouldn't disagree with that. It's just incredible the amount of sales we've had from, not just the primary market, but promoters, early investors, PE, funds, for a variety of reasons. It's been natural. Everything is cyclical, right? Everything reverts back to mean, one way or the other. You think this is going to be that year? What is your sense, Amit?
See, people are forgetting the quality of supply has been pretty good. There may be a bit of pricing aspects which are...
on quality supply will be wiser in a couple of years from now. It's been good. I don't disagree. It's not been crappy like in earlier cycles. But
so once you have a quality of supply which is good, as I said, there can be timing mismatches on issuances. Issuances are not going away. You could have a scenario where 1 or 2 months extra taken to price an IPO just because of volatility conditions or liquidity conditions, but the IPOs happen. It's a matter of sometimes a bit of more push into the market and waiting for the right liquidity conditions to price them. But the IPOs will happen.
All right. Amit, I wanted your view on this.
We are also becoming a deeper market.
Yeah.
Let's not forget, we are not today almost a $5 trillion kind of a market cap country. So you cannot compare that just because the last 3-4 years there's been a good amount of supply, so it has to flat out.
No, actually,
it's a function of liquidity, like you're saying, and with the kind of domestic institutional liquidity in the market.
Yeah.
But the question is, with the market sentiment and the market being as challenging as it has been, whether you're confident of seeing that kind of liquidity to push through the blocks, the deals, and the QIPs.
Last year also, FIs were significant net sellers on the secondary market.
I wanted to ask you on that.
But they were significant buyers on the primary
exactly.
market.
So I wanted to ask you on that, right?
These are cycles. These are trading patterns that investors will follow for themselves.
But the only thing is that the bigger fear is that will supply overwhelm demand. I mean, markets.
So that's what I said. So it will pan out. So if you're getting too much supply in a particular month, it may not happen that month. It may take 2 months more. So it will roll over. Some amount of supply will roll over.
Because if somebody like Narain, for example, he said this on a public platform. I think he was reminiscing about the late 90s. I mean, that big bull market was ended by too much supply. I mean, it died. I mean, the market died.
It also ended up with a lot of crappy supply.
But as I said, we'll be wiser in hindsight, right? A few years down the line.
Is much better.
Well, you look at the last 5 years.
Yeah.
The quality of supply is much better.
So, Amit, I wanted to ask you about this, because on a day-to-day basis, we track the FI flows in the secondary market, and they have been negative. But as you mentioned, yes, a lot of that money actually has gone into the primary market, in QIPs, IPOs, etc.
And they made money.
And so if this supply is going to continue, if we're going to see the IPO market is going to be very, very vibrant, the FIs actually have a reason, right? They're making some space in the secondary market, and they're pumping back that money in. So do you think that we could see more of the same? Or, the other point of view is if the market's a little bit subdued, the IPO market gets a little bit subdued, which in turn could force the FIs not to sell so much. Your take?
So it is also sectorial dependent. It cannot be broad brush.
Okay.
There will be pockets of market where investors may be net sellers, period. There is just overpricing, or otherwise is that it's overvalued, and they'll be net sellers. They may not participate in IPOs also.
Okay.
But these are sectorial rotations, these are market cap rotations that every opportunity to enter. So large caps are right now, seen as a favored bet. Now, are there enough large cap IPOs coming to the market? The answer is yes. So will they find? The answer is yes. So these are cycles you have to play along. As I said, as long as there is no material challenged supply coming to the market, I think the market will absorb. There may be time periods which might get elongated.
On the kind of issues, just to complete this point, then we have to talk about M&A as well, which is the other big piece that you track. But just to complete this piece, in terms of the kind of deals that we'll see in the ECM space, last year's big headlines was, say, a Hyundai coming and listing in the Indian market, and the issue got, sailed through beautifully, right? There's a lot of, buzz around LG now. But the market sentiment, again, is a little different. So what are the kind of marquee headline, IPO deals or even exits that, maybe large PE exits that we can watch out for in the next couple of months?
Oh, definitely. There are bank-led NBFC IPOs. There are tier 1 large cap financial sector IPOs, which are in the coming. There are a number of large private equity, healthcare services related IPOs, and these are not sectors which are overly cyclical. These are largely defensive sectors, and they will find receptivity in the market. So watch out for healthcare services space, watch out for large financial space.
Okay.
Speaking of deals, look at these guys. They went away in 2000. Now they're back, and they're back at a much, much better price, 739, and that's a good premium, about 4-5% in a market like this over the
and an IPO which was not necessarily hugely oversubscribed.
Absolutely. I think till the last date wasn't subscribed as well. So that's a very, very good listing, actually. And if you track, the grey market premium as well, till yesterday it was absent. It moved into a bit of a discount over the last few days as well.
Incidental.
So 5% uptake is good, 745.
And they're going with the Chariots of Fire
what
theme.
We were talking.
They're going with the Chariots of Fire theme, one of the most classic pieces of music there. That's a big comeback by Hexaware. But you were completing the points of, we will still see some big global listings in India apart from the...
Definitely there are in the works. Definitely. Sometime, as I said, it's a question of timing. Hyundai was also in the making for a while.
Yeah.
So
LG is the next one.
there are many of them.
Yeah. So, but
There are many of them. Let me put it that
do you
way.
think what's motivating them? Some of these larger sort of Indian subsidiaries of MNCs to list here.
2 or 3 factors, right? I think it's spoken of. One is obviously the valuation multiples. There's clearly a valuation arbitrage. It actually re-rates the parent in some ways. Second, a lot of these are large, matured, well-run businesses in India. They ought to have a local Indian identity in terms of a listing. It also helps in terms of corporate governance, disclosures, in terms of employee retention, etc. So I think these are well-documented reasons, and I think it's catching up the fancy.
Number one is valuation.
It's an important one. It's a very important one. From the parents'
I mean,
perspective,
there's nothing wrong with it, but it's just...
it's a very important one. And why should not be?
And sorry, we're going on with these equity market questions, but I'm coming to the M&A deals in just a bit. Last question on ECM. The last 2 years saw a lot of new businesses list as well, whether it was platform companies, consumer companies, big names in the renewable space, and you folks worked on some of those deals as well. Any more sunrise big issues coming in? And again, I don't think this market would have the appetite maybe for loss-making companies right now. What's the mood in terms of the financial quality that you have to bring to the secondary market?
So there are 2 themes. Clearly, anything to do with clean energy related verticals, and it's both the infrastructure ownership businesses as well as businesses linked around that. Especially given, again, you can call it China plus one or supply chain benefits that India is getting. A lot of them are also export driven, and they will find receptivity in the market. It's a segment which was non-prevalent in the Indian markets for a while. We opened up that segment with Wari last year, and in many ways we see supply of paper coming in and around that area. The question around loss-making sort of tech-driven businesses, actually a lot of them are not necessarily today just a story. They are real businesses with real sort of business models which are working well. They may be loss-making, but that's simply because they're supporting growth.
Sure.
It's a very different cycle from 21, 22.
Sure.
And I think the market will support them. Maybe right now the market is a little subdued for that. But as I said, these liquidity conditions, market conditions change.
So Amit, now coming to M&A, which has also been very, very active.
Yeah.
For 2025, what are the kind of big mergers and acquisitions? Inbound, outbound, what are we in for?
Clean energy will be active. It had been somewhat subdued last 18 months. Clean energy related deals will be active, albeit it not be just another international player coming and buying. It will be a lot of domestic consolidation as well in and around clean energy related sectors. You will see some financial sector activity, which had been kind of not so much last year, but it has always been in spurts. I think we are at the cusp where a lot of players in the financial sector realize the need for consolidation. You will see continuous activity around broadly industrials. And that's pretty broad, right? So it's auto related, it's some of the industrial sectors related activity. I don't particularly see too much of outbound, but in pockets, yes. There will be pockets of that. Last year, there was some activity around outbound, both on the pharma space, on telecom side. So that will be in pockets. I think the question you might also want to ask me is what happens to inbound? Strategic. Is it a very big playbook? The answer is no, but it's an important playbook to watch. It has been that way for the last 3-4 years. And you will see inbound activity, strategic, from Asia, from Europe, coming into India.
All right, Amit, we'll leave it there. Thank you very much. Good conversation. Appreciate you coming down to our studios. And look forward to our next one.
Thank you for having me.
Thank you.